Hello, my name's Rupert Ponton and I'm Head of Insight and Communications here at Brego. Welcome to the September UK Brego broadcast, in which we're going to be having a look at what's been happening in the UK car market and also have a look at a sort of high-level review of what's been going on from a political and economic perspective, as well as a good look at what's been happening in the new car market as well. So let's get started with what's been happening in the UK economy. The UK economy has been a little bit tricky during September and not as good as many people were hoping. Still a lot of concern about some of the activities around the government and the global position as well. But here we are. Inflation remains steady at 3.8%. Unfortunately, that is almost twice the government target, which of course is 2%. And it was a surprise that we didn't see that begin to drop because that's what the pundits had expected. But rises in motoring costs, motor fuel, food, restaurants, hotels, they all helped contribute to keep that figure static at 3.8%. Now, the next update we're going to get on the inflation rate will be October the 22nd. So let's hope that that started to come down. That would be really good if it could. The bank base rate was reduced on August the 7th to 4%, and that's remained the same. Unfortunately, we're now in a position where we're not expecting to have any further decreases towards the end of the year. I think that's probably being driven by the economic unrest and the fact that we're likely to see tax increases later in the year. Business confidence reported quarterly, sitting at -27 still, and that is static. We're expecting that to drop by the end of Q4 to probably -31 according to the CBI, but we'll just have to wait and see. Consumer confidence unfortunately edged back downwards to -19 from -17, which seems to be a reaction to the state of the government and, as I said, the impending tax increases that we're expecting to come through in the budget on November the 26th. Average mortgage rate for a 2-year fixed is at 4.51%, and the 5-year is slightly higher at 4.55%. That's pretty consistent with last month, so nothing positive to report there. And thank you to Rightmove for that information. So yeah, major purchase index, that's dropped a further 2 points to -19, and that is probably further confirmation of that consumer unease that we were talking about just a second ago. When we're looking at fuel prices, the cost of a litre of unleaded has gone up to 134.3 on September the 29th, and the diesel is sitting at 142.9. Both those gone up slightly, which was unfortunate. And finally, just to mention, the unemployment rate has remained static at 4.7%. Unlikely that we're going to see any positive change in that. We are expecting a forecast of, we're expecting a peak of that to be at 4.9% by the end of Q1 2026. So what's been happening with the new car market? Well, actually, it's been much better for everybody. However, whilst we have seen increases in registrations, this has been due to some heavy discounting and a significant increase in pre-registration activity, which we'll touch on in just a few moments when we look at the Brego data. It's positive from the EV perspective because the government bonuses have begun to gather pace. However, let's just remember only 37 cars in the UK qualify for those bonus, and there are two bands. One is 3750, and only two cars qualify for that. They're both Fords. The rest of the cars qualify for £1,500. But it's interesting to note that the Chinese brands and some other manufacturers have been putting their own support behind their vehicles, and they're doing that irrespective of age, irrespective of banding. So essentially, they've been matching that 3750 that the government were talking about, that the government have got in place, but not for all vehicles. Incidentally, it's rumoured that the government's beginning to reach the end of the pot of money they put aside for that EV bonus, but we'll just have to wait and see. So, in short, registrations up 13.7% on September 2024, and that's a positive. Private registrations up 8.9%, and they take 41.9% of the registrations during the month of September. Fleet were up 16.9%, and they took 55.7% of market share, and that is up by 1.5%. In terms of EV sales went up by 29.1%, which is a whopping figure. That's off the back of 14.9% the previous month. And market share for September was 23.3, actually 26.5% last year, so just 2.8% difference there. Now, it is worth reminding us all that we do need to hit 28% by the end of 2025. So we're a little bit behind in terms of that. Plug-in hybrid, we're up by 38.2%. and they took a 10.9% market share for the month. And petrol were up 2.4%, whilst we saw diesel down by 28.2%. There are so few diesels in the marketplace now. It's really minimal. It's going to have a real impact on used car sales as we go further forward. But that's just 4% of the market. Top OEMs: VW 8.1% and Kia 5.8% and BMW 5.6%. All those are slightly lower than they were in previous month. And part of the reason for that is what's going on with the Chinese brands. So Chinese brands on sale in the UK. The Chery Group sold over 12,000 cars in September, and that is 3.86% of the market. Its closest rival was BYD, and this is probably the first time that Chery Group has overtaken BYD. BYD had a 3.6% market share. And just for reference, Tesla 2.5% share, and Polestar somewhere behind with 0.9%. So let's have a look at the UK used car market, and this is using Brego Whole Market data. We see up to 1 million retail advertising points per day, and we work with that data and AI to create our valuations and future forecasts. So in terms of the market as a whole, total adverts were up by 10.1%. Now, that implies two things. Firstly, do we have a slower market? Are we selling less cars? Or is there more used car stock availability? Therefore, the dealers are able to buy more cars and put more cars into the marketplace on sale. Secondly, we're going to look at the pre-reg adverts, which were up, as I mentioned earlier, but by 13.2%. That's up from the 9.7% increase we saw last month. Now, this is in part due to the fact that there's been a push for the new registration plate and therefore the clearance of older models from the dealers. But also, this is probably the first part of the push for the end of the year in terms of new car sales for EVs, trying to meet that 28% target. And therefore, the dealers are really having to register as much as possible to meet targets and to get those cars into the marketplace as quickly as possible. So this is likely to continue as we go forward. We've talked about it before, but yes, so I think that's the first sign we're seeing of a real push. Trade adverts were up by 7.9%, and now that supports the fact that there are more used cars available for the trade, because if the dealers have got more vehicles available for sale, we're obviously going to see them advertising more. Or are they trying to generate more activity in the marketplace? Is there a commercial support in place from some of the retail advertising platforms? But generally speaking, I think we probably understand there's been a little bit of a turn down in the market. EV adverts up 3.4%. Still appears to be good demand from the customer, and I think we're probably seeing more than that coming back into the market in terms of EVs. But they're not all being because there's good consumer demand, we don't see a great increase in the volume available for sale in the market. Hybrid adverts up 10.5%. That's kind of expected because over the past few years we've had that push towards hybrid vehicles rather than just petrol or fossil fuel. Petrol adverts up 6.8%. This is probably due to the fact that we've got quite high fleet registrations, so they're driving those petrol cars back into the marketplace for the consumer, whilst at the same time those fleet registrations quite often are electric vehicles, so we're churning people from petrol into electric, which is kind of good. Days to sale 29.5. They came down slightly, and that actually is contradictory to what we've seen in terms of the volume of stock in market, because it suggests that the market is active. But I will point out that this can be skewed by certain models. In many cases, some of the really popular EVs will sell like that really, really quickly, and that tends to drive down the average days to sale, as you would imagine. And as such, I think that might be the case here. EV days to sale sitting at 31.1, slightly better than the 33 the previous month. So, and that's positive. We will highlight we do remove some outliers on some of those very high value pure EVs that can take several hundred days to sell. The average used car price was up 3.1%, and that's now at 17,955. And I think that's in part boosted by the fact that quite a lot of activity in the marketplace has been at the cheaper end, and therefore you're essentially taking those cheaper cars out of the market and pushing the average retail price up. Average EV price was up 4.3%, and I think this is suggesting there's stability in the market, which is positive, and again that more of the older cars are being sold. So in summary, September did see a reduction in footfall and inquiries for many people. The question is, what drove this? Was it a lack of consumer confidence, or was it the fact that, it is a time of just a certain time of year? I think it's probably the lack of consumer confidence. We've seen a lumpy month for the government, concerns over tax issues coming up in the upcoming budget. There have been other key issues that have caused unrest, and of course, there's been some trust issues as well, which have probably all given the consumer a little bit of an uncomfortable feeling, full stop. Dealer group financial reporting remains polarized. We see a number of dealer groups that have posted significant losses, some quite surprisingly, but equally we've seen others that have been very, very positive, and that's great news. Margins, though, are still under pressure for some people, but as I just said, there have been some positive financial reports, so not the case for everybody. Greater EVs, volumes of EVs coming to the used market, that's a positive in some respects, and coupled with that, there's that big surge of new registrations helped by high volumes of support, particularly from those Chinese brands. So with more choice, if we're talking about the fact that there are more used car adverts in market, with more choice comes the ability for the dealer to pick and choose wholesale stock in better condition to put on their forecourt. So that's giving them lower refurbishment costs, and of course that's going to be helping with the margin issues. Anyway, this is just a snapshot of what the market has done. If you want to read more detail, then please have a look at the monthly Car Insight report, which can be found on the LinkedIn page, the Brego LinkedIn page, or on the Brego website, or you can reach out to me and I can email that across to you. But I think overall, if you need or you want to improve your market insight and your understanding of the nuances in today's UK auto marketplace, then you really need to speak to the guys in the Brego sales team. Andy and Safi would be delighted to show you how Brego platform and Brego pricing and our market data will help you to improve understanding. And of course, if you've improved understanding, then you will increase your company's profitability. Thank you very much indeed for your time. I look forward to seeing you again soon.